Ladies and gentlemen, we've got very important questions from the community about the cryptocurrency market to answer today. Questions about whether Bitcoin can go to a price target of 180,000 to 190,000 and what the big problems with Bitcoin going that high are specifically. Where I think Bitcoin will go in the next bear market, so looking far ahead now to next year. At what date or price I would concede the 4-year cycle might be broken. Whether I think Bitcoin can top out and then altcoins can keep running after like we saw in 2017, and how I'd be preparing for that if that was the case. Would I hold my altcoins blindly past the Bitcoin top? Would I sell off at the Bitcoin top and then rebuy if I saw evidence of Ethereum and altcoins going further? I'll give you my thoughts on that. And then finally, a question about market manipulation. Do I think it exists? To what extent do I think it exists? And do I think that market manipulators are holding down the altcoin market? My answer on that might surprise you. This is part 2. Before we get into it, guys, check out the Bitunix Exchange. I'd really appreciate it if you go and use that link down below to sign up. You just need an email address and a password. The exchange doesn't care where you're from. It's globally accessible. No VPN is required. It's never had a security breach before. Not a single hack in its entire 4-year market history. It's got everything you'd expect from a major exchange. And with my referral link down below that I'm asking you to sign up with, you can get a 15%, you will get a 15% trading fee discount attached to your account for life. So use that link down below. Help out the channel and help out yourself. Appreciate that, guys. Let's get into it. All right, guys, first question here. Do you think a top of 180,000 to 190,000 US dollars on Bitcoin is realistic? The issue with a top of that price is we are running out of time. That's the main issue, okay? There's 2 issues. One of them is we're running out of time, and one of them is the structures that have been existing throughout Bitcoin cycles don't really suggest it's going to go that high without price action deviation. Now, there's a difference between price action deviation and date range deviation. So we're kind of facing 2 major issues with a top higher than something like 130,000. Now, first of all, we have to establish why is 130,000 an important level. I do that very quickly here. We have an angle-based channel on the logarithmic chart with the angles from top to top and bottom to bottom of each cycle halving every cycle. You can see that where I'm circling right now. All we need to do is extrapolate that channel forward. And what we see is that in October this year, when the cycle expects the top to be, will be at about 130,000, meaning that $130,000 is basically the base case top for Bitcoin. That's supported by the power law chart. The green line on the power law chart, which has marked 2 significant macro rejections recently in the last year and a half, will also be at 130,000 in October. And on top of that, this long-term ascending support and resistance line, which has been extremely influential on basically every single time we've touched it, is also going to be at 130,000 in October. So 130,000 does look a lot like the base case. Again, I'm not willing to predict that as the top, but it does look very reasonable to assume that could be at least a level of major importance, if not the top. Not enough data to go ahead and say it's going to be the top, of course, but it looks relatively realistic. So all of these price-based structures, which are pointing towards 130K, would have to break. Now, that's not impossible. It's certainly not impossible. It certainly could happen. But the problem that arises is, well, first and foremost, that's a very major resistance level. It's coming from 3 separate independent indicators saying the same thing. There's resistance at 130,000. The second thing that's kind of concerning in estimating or assuming that Bitcoin's going to go higher than that is that we don't really have that much time left in the cycle. The cycle, the date range trend that underpins all Bitcoin price action, the 4-year cycle, which is independently verifiable by 6 or 7 micro trends, says we're going to be topping around October, more or less. Now, if we look at when October is and we visualize it, this is October. This vertical line in yellow is basically around when Bitcoin should be topping, around October. Let's just say late October, right? Somewhere there, give or take a few weeks, okay? But let's just say late October. That's how much time Bitcoin has. Now, if Bitcoin's going to go to something like 200,000 or 190,000, like you said, this is what Bitcoin would have to do to get there, right? That's the angle of trajectory that Bitcoin would have to move pretty much in one sweeping move. We wouldn't have time necessarily to see a move up to 150 and then consolidation and correction and then another one, or we'd be very low on time to do so. So the longer we consolidate, the less realistic a higher top becomes. It's not off the table yet. But I'll say this, if we're still in the same price range in 2 months, if it's, August, late August, and we have to do this to get to 200,000, you can pretty much count your chickens hatched. It's off the table. So we're very much running out of time to make a top significantly higher than something like 130,000, provided we remain within the cycle. Now, obviously, the cycle could break as a whole, and that's kind of a whole different question. In fact, I'll make a video on that specifically tomorrow. So to answer your question, it's not that it's necessarily unrealistic yet. It would just be difficult. There's a lot that we need to conquer at 130,000 in order to get there, and we don't have enough, and we don't really have that much time to do it. So I would say that it's still on the table, but with each passing day, it becomes less likely. Follow-up question using a lot of the same charts we just used. What do you think the lowest price Bitcoin will go in the next cycle is, the next bear market is? And all I have to go off on that topic is basically looking at two things. Well, one of them is this channel, assuming it remains, which again, it doesn't really have to remain, it could break. But I will just mention that even if we break the top of this channel, the secondary baseline, the line down here, is still independent. It's not contingent on the top. Even though it looks like a parallel channel, these lines will have to be invalidated independently. And so for that reason, assuming the cycle remains, which is again the only thing we have to go off at this point in time, we'd likely be seeing a cycle bottom in late 2026. Let's just say November. In fact, I'll just verify when that is. So as per the 4-year cycle, there's 1,400 days from bottom to bottom. So therefore, that would take us to around November 2026. And from top to bottom, just to cross-verify here, about 400 days, assuming we top in October. 400 days from that point, again, will be November 26. So you can see how the 4-year cycle works here. It's very useful. So basically, we're looking at a bottom, for the next bear market around November 2026, give or take. And this line, this baseline of extrapolation would be at around 32,000, the low to mid $30,000 region in that price, in that date range. So maybe we're looking at something like the low to mid $30,000 region for the bottom in the next bear market, which seems relatively realistic with diminishing returns. If we were to top at 130,000, 130,000 is about twice as high as the previous top, and 30-something thousand would be about twice as high as the previous bottom. So that would make a lot of sense. But it does rely on the top price of Bitcoin. And the reason it does is because we do also have developing trends forming with Bitcoin's percentage drawdown per cycle. So let's just use $30,000 as the baseline, and then we'll come to another prediction here or observation about what the bottom could be and compare the two. So in our first cycle, Bitcoin went downwards from the all-time high, about 86%. The next cycle was about 84%. And the next cycle, I believe, it was about, 77%? Okay, so you have a, kind of trend here where each cycle, the angle of drop or the percentage of drop from peak to trough is getting lower and lower and lower. 86, 84, 77. It actually sharply decreased in 2021, probably because the cycle was, not really in a good position to reach much higher than it did, given its massive correction in the middle of the year. Maybe should have gone a little bit higher. So let's just assume that, 86, 84, 77, let's just say 75. Let's say that 2% drop per cycle continues throughout time. So let's say 75% drop, and let's just assume the peak is 135,000. A 75% drop from that price region would be at around, again, the mid $30,000 region. Now let's assume that Bitcoin does manage to go higher. Let's say it goes to 150K. Let's say it breaks up a little bit higher than some of the charts expect. 75% drop from that region would be, again, in the high $30,000 region. So you have to go pretty high on Bitcoin to get away from that $30,000 level. So something in the 30,000s looks relatively likely for the next bear market bottom, assuming the 4-year cycle remains, and assuming Bitcoin doesn't just breach upwards massively to like 200K. And even then, it would still probably be something like 40,000. And for that reason, given the fact that 130,000 is already a relatively conservative target, I don't really think it will go lower than something like 30K. I think that would be pretty catastrophic for Bitcoin's long-term health. This next question is something I'll get into tomorrow as well when I make a video about the potential cycle break. If we are in December to January and Bitcoin starts ripping above 200,000, will that be enough for you to say the 4-year cycle is broken? If so, would you base your top cycle theory on something else? What would it be based on? Okay, so first of all, no matter what price Bitcoin goes to, it doesn't matter. I don't care about the price. Bitcoin could go to 500,000 and still maintain the 4-year cycle. The 4-year cycle is based on dates, not prices. Prices have nothing to do with it. If Bitcoin topped out at 75,000 in this bull market, but it did it in October, that would still be a relevant and valid 4-year cycle top. So that 200K number is irrelevant to me. What is relevant is the dates. So December to January, would I be convinced that the 4-year cycle is broken? If not, when would I be convinced the 4-year cycle is broken, or at least, changing fundamentally? That's the big difference, right? It's like, if we end up topping in January, it's like, okay, it's not a significant deviation. It's about, a month and a half later than expected. So is the cycle broken, or is, there just a change to the trends that underpin the cycle? That's the issue of this. We don't really know, because we don't really have enough data points. I mean, even within the 4-year cycle, which is such a strong trend, and so in the strongest trend Bitcoin has, certainly, we still only have 3 data points. And it's not absurd, it's not ridiculous to see relatively significant deviations with such a small amount of data points. But at some point, it would just become blatantly obvious. Like, if we look at these micro trends we have micro trends, in one cycle it took 497 days, then it took 504, then it took 530. Another one, 1,470, then 1,435, then 1,449. So you can see, like, even though these are clearly trends, I mean, beyond the point of coincidence, there is still room for some degree of deviation, like a week, 2 weeks, 3 weeks, maybe a month. Anything more than a month, I would start to get concerned. And I think, just to keep it clean, if the dead center of the 4-year cycle predictions is looking at late October, adding, a month to that would be late November. Let's just say if we get into December, particularly after Christmas, and we're still, breaching up to the upside, at that point, you'd start to lose confidence in the 4-year cycle date range trend, and you'd start to rely on independent TA, and then you'd wait for the top, and wherever that may be, you'd look back, and in hindsight, you'd assess whether the cycle is still valid. So I would give the 4-year cycle a good month, a solid month, to, range wherever it wants to. If it tops a month before late October or a month after late October, that's still very much within the bounds of the cycle's regular deviations, in my view. Something we've got to consider is that one of these micro trends within the cycle is that the cycle is adding 30 days each cycle. It's getting longer by 30 days each cycle from halving to top. So that's something you've got to consider as well. We don't really have it down to the week. We have it down to maybe a couple of month kind of range. So Q4 was that what I was originally saying. I am relatively confident in saying, okay, probably late October to November. But even in saying that, we're still kind of looking at that vague Q4 region. So if we get into late December or January and Bitcoin's not topped yet, yeah, okay, cool. That's when we can start to look at other things. What would we look at? Well, that's a whole different question. There's lots of indicators. I'll just give you one. Monthly chart RSI on Bitcoin, there's a clear descending channel formation on the monthly chart RSI, which has predicted tops and bottoms historically. If we reach that level, especially around the 4-year cycle deadline, well, then that's clearly a top. But if we reach it after a 4-year cycle deadline, we do, go on to March, April, whatever next year, that could be an indicator marking the top. Other than that, there's a few more indicators, but specifically one thing I'd be looking at without the 4-year cycle is I'd really pay attention to where a macro breakdown would be. I wouldn't be too concerned about where a macro top prediction would be, because the biggest macro top prediction, the 4-year cycle, had broken at that point. And so relying on any other macro top prediction would be kind of futile, I think. What I'd be doing is, again, looking at macro breakdowns as validation of the top, not actual catching the top itself. And leading on from that is the next question. Even if there is a chance that altcoin season could come after Bitcoin tops, is it even worth the risk holding altcoins past the expected 4-year cycle top? And I'll just leave you with the same conclusion I just made there in the previous question. But before I do that, I'll give you some context though. Historically, and we do know that altcoins are underperforming this cycle, we do also know that an altcoin season still is on the table. With not much time left, a lot of people are speculating that the altcoin season could go on further than the Bitcoin top, like we did in 2017. In 2017, Bitcoin topped over here in December, but Ethereum and altcoins ran until early January. And in fact, if we bring up the Ethereum chart and compare it to the Bitcoin chart here, we can see it's logarithmic, so it doesn't really show that easily, but we can see that when Bitcoin topped, Ethereum was at 600, and by the time Ethereum topped a month later, it was at 1,300. Ethereum doubled, right? Doubled in the time period after Bitcoin topped. When Bitcoin was going downwards, Bitcoin went from 20,000 all the way to something like $12,000 or something like that by the time Ethereum topped, and Ethereum had doubled what it done previously during the rest of the Bitcoin bull market. So not only can altcoins keep running after the Bitcoin top, they can do it very powerfully. In fact, you can see the bulk of the altcoin season after the Bitcoin topped. Now, we didn't see that in 2021. That's the issue of saying it's a trend, and that's the issue of saying we should expect it. We don't really know whether to expect it because in 2021, they just topped together and moved together. 2017, that didn't occur. So we've got one data point saying one thing, another data point saying the other thing. We don't really know what will happen. Yeah, we can get into speculation, and I've done that previously, but I'm not going to do that now for the sake of simplicity here. What I will say is this: since we don't definitively know, what we can do is what I just said in the prior question. We can wait for the macro breakdowns on the specific altcoins you are holding. Rather than just getting the hell out as soon as Bitcoin's topped, you can wait for specific levels to break. That would validate that, okay, that actually was the top. We're not going to see this parabolic blow off top. It's time to get out. And to finish off here, we have a question which I've answered before, but I'll just answer it again because the comment was so kind. It seems like Bitcoin rises and altcoins just get wrecked. Is this by design? Without the excessive greed, the market makers are just scooping the cream. I oftentimes get very hesitant to fall into what I think is the trap of thinking, oh, the market makers are doing this, the market manipulators are ruining everything for everyone. I don't think that's the case. I'll just read you this excerpt from my VIP group chat, previously VIP group chat. It's now free to join if you want to join it, where I post things like this occasionally and lots of people discuss things. I'll read out this to you. I think this is very important about institutional manipulation, the idea of it. Institutional manipulation does exist. Market makers do not exist outside of circumstantial situations, and even then it's only potential. As a collective entity working together, liquidation wicks and stop hunting are oftentimes natural results of price action, sometimes manipulation, no doubt, but the point is the mechanism for what looks like stop hunting exists without manipulation. Regardless of if the market makers exist as a collective unit of institutions working together, TA works even under that assumption. Right? TA is always your best bet. Very often, what most would deem to be manipulation is actually just abnormal sentiment leading to irrational price action, as was likely the case throughout the lead up to the ETF releases. And here's like a conclusion a too long didn't read. Manipulation occurs. It's not always a grand conspiracy of tons of institutions working together to take retail's money. Perhaps that occurs occasionally, but retail actively lose and institutions actively win, so it looks like that's always the case. The truth is hard to pin down. Trust the TA regardless of the truth. So what I'm saying there, it's a long-winded way of saying, is that things that look like manipulation, right, mechanisms for that to occur exist without manipulation having to occur. Right? What looks like, oh, the institutions are stealing my money, they clearly stop hunted me on that trade. That exists without market manipulators having to exist, right? That's just a roll-on effect, the domino effect of how markets work. The price moves until there's an order big enough to eat up that price and make it reverse. And sometimes your order is that order that gets eaten up, especially if you set it according to the TA, because if you're setting it to according to the TA, that means many other people are doing the same, and that means that order, that zone has a massive amount of orders there for the price to potentially reverse on, and it looks like you're all getting hunted by an institution on Wall Street, but in reality, that's just how the market works. So I'm very hesitant to ever assume anything is market manipulation. I don't think market manipulation doesn't exist. Of course it exists to some extent. There's huge amounts of corruption and, for example, insider trading and things like that. But to assume that every single move is a result of market manipulation is ridiculous. I don't think that's the case at all. I think most of the moves are just market psychology and regular market functions. Surrounding big events like FOMC, big events like news events, yeah, okay, that's when manipulation is likely to take place because people have insider information. But on a regular Tuesday, I just don't think that's happening. So with regards to, is it planned that altcoins are getting wrecked and Bitcoin's doing well? I don't think so. I think it's just a natural result of the price action. And again, here's the explanation I've given historically. Right? Previously, we've seen very incline exponential bull markets with very few corrections and very short-lived corrections. That's not what we've seen this time. We've seen long, withdrawn, standing out corrections that have lasted 8-9 months at a time, 6 to 9 months at a time. This is not typical. This is not what Bitcoin and cryptocurrency usually done. And we know that altcoins thrive off of greed and hype. There's not much hype in a 6 to 8 month correction, and therefore altcoins just have underperformed dramatically because the market environment this cycle has not been conducive to altcoin performance. That would be my explanation on why altcoins are not doing well. Is there a factor of that is manipulation? Possibly. It's hard to know. But that explanation still remains valid even if there hasn't been, and even if there has been. So guys, thank you for watching. I hope you enjoyed. I know it's a long one today, but we got through quite a lot. I had to skip one question here about the M2. I just didn't want to make this a 30-minute video. That question might take a little while to answer, but I'll answer that shortly. Before we end off, check out the Bitunix Exchange if you're interested. It's global, non-KYC, accessible from anywhere in the world, never been hacked before. And with my referral link down below, you can get a 15% trading fee discount attached to your account permanently. So help out the channel and help out yourself. Sign up with that link below. Really appreciate that if you did. And thanks, guys. Catch you later.